Chris from thetraderguy.com taking a look at this upcoming week, the week of April 15th, and a trade idea that I'm paying attention to. This one's going to be a little bit different in the sense that it's not so much an idea to act upon right away, but something to pay attention to. The dollar yen in front of you, as you can see, and as everybody in the Forex world knows, has been in a very massive uptrend. You can see that the ranges have widened out quite a bit, but all things being equal, you could more or less draw this channel here. There was a dip below it, but you can see that this has acted as support and resistance several times until we had that day. And this particular candle here was the day that the Japanese announced that they were going to expand monetary policy even beyond what the Fed does. So you can see what the reaction was. But over the last couple of sessions, we've had a couple interesting candles right around the 100 level. As you can see, this candle here is a hammer, and the hammer at the top of an upswing that gets broken to the downside is turned into what they call a hanging man, and that's very bearish. And unfortunately, there will be plenty of you out there that will say, look at this pair, it's gone too far. There's got to be a ton of money to be made shorting it. And that is where real trouble starts. The difference between the professional trader and the novice trader is the novice trader is continually trying to pick tops and bottoms, where the professional trader will look at something like this, and hopefully I'm acting professionally when I see this, and I don't write off buying it. I do definitely write off selling it, though. There's absolutely no point, and I could be told, quite frankly, that this is going to fall down to 97 or something, and I don't care. I'm going to leave it alone. And the reason is that all things being equal, this should get more support going higher unless something fundamentally changes in this market. And really not much has. We hit the 100 level, an area where you would expect to see a lot of resistance, and now we've turned this into a hanging man. My first thought is, okay, well, where do I buy this pair? And I did close out all of my yen short positions going into the weekend. I'm no longer short the yen, and you'll see why here on a couple different charts. But when you see this, you can see that we definitely are more than likely going to have a pullback. This becomes a little bit more obvious on the weekly chart. You can see we've gone straight up, and now we formed what would be nothing short of a perfect shooting star at the perfect spot in this pair. What's even more interesting is if you go over to the Euro Yen weekly, you see the same thing essentially. So I'm starting to build a thesis that the yen is probably going to pick back up. Let's check the Swiss yen just for kicks. And there you go. There's the weekly for the Swiss yen. Very similar. So we're seeing it across the board. With that being the case, back to the dollar yen, the most traded pair, obviously. I look at this as a potential buying opportunity, but I also recognize the fact that it's not something that's going to happen right away. This might even take all week or 2 weeks or whatever, but we have very obvious spots on this chart that we can get involved in, and one of which would be the gap here acting as support. Maybe it doesn't really pull back that far, and that's 98. Right here, 97, and then for me, 95 is much more interesting than any of them. We'll see which one we get, and I will base the long position that I end up taking on wherever I see a supportive candle. So perhaps it will be a hammer on the daily, at one of these levels. I also recognize that this is a large enough uptrend that I'm willing to put my stop loss well below here. Say we get a signal at 95. I'm willing to give it a wide berth because this is a trend changing event. This wasn't some kind of random little flare up in this pair. I mean, you look at the monthly chart, the trend's changed. This is pretty classic here. And we stopped right where you would expect to see it. And if you throw a fib on the long-term chart, you can see we're right around the 50, I believe. Yeah, so we're right around the 50 percentile. So that just shows how resistive 100 will be. But at this point in time, and of course with the fundamental situation in Japan changing with the Bank of Japan buying all of the JGBs they can possibly get their hands on, and basically expanding their quantitative easing to double what the Fed is doing. Really, there's no way for this pair to not go up over time. You can see that it is overextended, and a pullback to 95 would be to roughly the 38, which is, you see this a lot in reversals. You see it go up to 50, back to 38, and then eventually above 50 again. It tends to find one level after another. Maybe it'll go up to 61, it'll stop up here. Well, that gets you right around 105. So, it all makes sense in the longer term. So, this video more or less was to tell you that I'm certainly going to keep buying this pair, but patience. Jesse Livermore once said that the market pays us to wait, and I think this is going to be one of those times. It doesn't mean there won't be trades in other markets, but right now I know that the big trade is to short the yen, and I do have this fear that some of our friends who haven't traded as long are looking maybe at the daily chart, or worse yet, the 4-hour chart, and they say, well, look at this gap, maybe I should just buy here before we even get to that gap because it should be massive support, and they could be right, but in reality, that's a pretty tall order. Now, the one caveat to this, of course, is if we get a daily close above 100 and we break the top of this shooting star, that is an extraordinarily bullish sign, and it means we'll probably go parabolic again. At that point in time, I would go ahead and pay up for the trade. But the way things are setting up everywhere, kind of in congruence with each other, I really think we're going to have a little bit of a pullback here, which allows you to simply buy the dollar on sale. That's how you have to look at this sometimes. Is it cheap? Is it expensive? Well, it's a bit expensive now with the way it's gone. But if we get a pullback, say to 95 or so, or heaven forbid down to 90 even, that would make it very cheap and very interesting. But I don't think we'll fall 900 pips or so, 862 pips. I don't see that happening. Even though it's been a large move. These moves happen for a reason. So swimming against the current certainly ain't going to way to go. Going to be the way to go in this market. So I'm just simply going to sit on the sidelines and let it come back to me and re-enter the trade again.